The biggest risk is more macro. From that point of view, in our long-term forecast, which our bull case for 2030 has been $1.5 million, that would have taken $200,000 to $300,000 off of that price target. But what else has happened in the last year? We've seen gold really go parabolic, and Bitcoin has not done the same. Well, how can that be? It's digital gold, we thought.
We are living through a period of profound technological transition, one that, in Cathie Wood's framework, rivals the Industrial Revolution in scope and consequence. But unlike prior revolutions driven by a single breakthrough, this one is powered by convergence. Artificial intelligence, robotics, energy storage, blockchain technology, and multi-omics in life sciences all evolving simultaneously and reinforcing one another. Wood's conviction around Bitcoin has not weakened. It has increased. She characterizes Bitcoin as the first global digital private monetary system in history. The most important word in that description is private. In her view, Bitcoin operates on rules-based monetary policy independent of government oversight. It is algorithmic, transparent, and globally accessible. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
We do believe, and our conviction has increased, that Bitcoin is the first global, digital, private, meaning no government oversight, rules-based, most important part of it, monetary system in history. That is a very big idea. Now, what has happened in the last year or so, stablecoins have been usurping one of the roles that many of us thought Bitcoin would play. In the emerging markets, people who are living hand to mouth, meaning they don't have a lot of savings, they would much prefer the dollar, and stable coins are backed pretty much 100% by dollar or dollar-based assets. And so that is their preferred insurance policy against their own currency's devaluation and the loss of purchasing power and wealth. So from that point of view, in our long-term forecast, which our bull case for 2030 has been $1.5 million, that would have taken $200,000 to $300,000 off of that price target. But what else has happened in the last year? We've seen gold really go parabolic, and Bitcoin has not done the same. Well, how can that be? It's digital gold, we thought. Well, if you look at the correlation between gold and Bitcoin, you'll see it's very low, especially since 2019, since more traditional investors have been getting involved with it. The correlation is 0.14, so almost no correlation. But if you zoom out and you look at the longer-term price chart of Bitcoin, what you'll see is gold often leads, and certainly in the last two cycles, Bitcoin's performance. So gold is a leading indicator in at least the last two cycles. We think the other thing going on is we're seeing a lot of OGs selling. Those who were very early adopters of Bitcoin are selling. Now, why are they selling? Well, according to some of them, Bitcoin has lost the plot. Too much traditional finance or financial players are getting involved. And from our point of view, all along, and this is in our collaboration with Dr. Arthur Laffer, known for the Laffer curve, he has said the more that Bitcoin becomes involved in the traditional financial ecosystem, meaning traditional financial institutions start adopting it, the stronger his conviction will be that it is indeed the new global monetary system I described. So our conviction has actually gone up as Bitcoin has gone down here. You can tell from price action recently, let's just say in the last year, anything with space and defense tech has had very strong performance. So the market is beginning to understand how big that opportunity is. And the same thing with AI. So our AI and Robotics Fund, ARKI, over the last year or two, that has done exceedingly well. True, it's had a correction. And from our point of view, this is more a buy the dip moment. The fund that has been the most challenged, and therefore where we're seeing the most skepticism, is the Genomic Fund, ARKG. And as I mentioned before, we believe that the most profound application of AI will be in healthcare from the point of view of collapsing the cost and time to discover new drugs. So going from 2.4 billion, including failures along the way, down to 600 or 700 million during the next 5 years, and going from 13 years to 8 years or less. The biggest risk is more macro. Our models are focused on something called Wright's Law. And Wright's Law helps us figure out the learning curve associated with each technology, robotics, energy storage, AI itself, the biggest catalyst out there, blockchain technology, and multiomics technologies in the life science space. And those learning curves are expressed in cost declines. Those learning curves depend very importantly on unit growth. If we went into a worldwide depression, I think that would delay these technologies. The irony is, during a depression or a serious recession is when many companies are looking for new ways of doing things, faster, cheaper, more creative, more efficient, more productive. And so the adoption, even though the unit growth dynamics aren't there, the mindset develops. And so we usually come out of those periods flying. These new technologies do. So a recession, a bad recession, would slow progress down, but it would not stop it. In another way, it would help evolve a coiled spring so that the end of the recession would be a massive takeoff in these new technologies.
Central to Wood's framework is Wright's Law, the principle that costs decline predictably with cumulative production. The more units produced, the faster costs fall. This dynamic applies to robotics, energy storage, AI, blockchain, and genomic sequencing. Technological progress is not linear. It compounds.
We are in print on Tesla. It's in the low $400 range per share right now. And we are in print. Our 2029 forecast is 2,600. That forecast has nothing for Optimus, so humanoid robots. And we're beginning to understand that while we were too aggressive on autonomous mobility, so robotaxis, we may be too conservative on the humanoid robot opportunity. So stay tuned for that update. The slow, and then all at once is very typical of technologies that really are hard to crack. I think Elon Musk genuinely thought that by the late teens, 2018, 19, he would be in there with robotaxis. We had just experienced a massive breakthrough in AI, transformer architecture in 2017. It has taken time for Tesla, Elon and team, to perfect the autonomous opportunity with the latest AI breakthroughs. Now we're there. And so we don't think technology is the problem anymore. We are seeing autonomous vehicles on the road. I can drive around in St. Petersburg with my current Tesla, full self-driving, and not touch the wheel or the accelerator or the brake, and I can park. So the technology is here. Regulations have to catch up. In the United States, we have 50 regulators, well, more than that in transportation, but 50 state regulators. We think that this government is going to elevate the regulatory regime to the federal status. And that is because autonomous vehicles, of course, cross from state to state. So it should be national transportation regulation. If we do get that, we believe that Tesla will be in certainly more than 25%, but probably up to 50% of all the cities in the United States, the major cities, and beyond, because, of course, Tesla's data is worldwide. The roughly 7 to 8 million robots that we all drive have been collecting data for years. I got my first Tesla Model 3 in 2018, and it has been collecting data every day and sending it back to Tesla. So Tesla knows the world's roads from a data point of view, we think, better than any other auto manufacturer or technology company out there. We began to get the sense that Elon is looking at the convergence among his companies very seriously. Convergence is a word we've been using in our big ideas we started in 2017, but the idea of convergence, that word really surfaced within the last 5 years. And Elon on X said, I think my companies are more convergence candidates than I even appreciated. That's when we knew that he was thinking carefully about all of the data sources he has that nobody else has. And AI, if anything, is a proprietary data project. Those with the proprietary data and the most of it and the most differentiated are probably going to win. So that's very big picture. In terms of SpaceX and XAI, when Elon started talking about orbital data centers in space, that's when we got the sense that this was a real possibility, this convergence. It happened more quickly than we expected. And yes, of course, it begs the question, will Tesla be next? We think that Elon would like to reward the very patient shareholders who have been holding Tesla for the last several years with the profitability associated with robotaxis. And so if Tesla is a part of this convergence strategy, and it could be, we don't think it will happen for a number of years. I think he'll want to integrate the space opportunity first. But the frustration of building data centers on Earth finally took Elon Musk back to first principles. Could we do this in space? There are no regulations in space. We could do this very quickly, much more quickly. And while we don't think he will have as many gigawatts of computing power up in space as he thinks by the end of the decade, we think he'll be well on his way by the end of the decade to meaningful computing power. I would have to say that the opportunities are more in embodied AI, meaning bringing the physical and the digital together. And so autonomous mobility, we think, will be the biggest revenue generator. It'll scale the most quickly to the $10 trillion mark, which is quite meaningful in a world where global GDP is about 130 trillion. We think that will happen within the next 5 to 10 years. And this movement has happened slowly, and now it's happening all at once. Elon Musk was talking about autonomous mobility in his master plan 12 years ago. And here we are Finally, he launched this year. So slowly, and now he's saying by the end of this year, depending on the regulatory environment, Tesla will be autonomous in 25 to 50% of all of the U.S. major cities. So that's one. And then the other one is in healthcare. While we may see the scaling of revenues the most quickly in autonomous transportation of all kinds, we think the most profound applications of AI are going to be in healthcare. And from a regulatory point of view, here in the United States at least, we're just strangling the healthcare sector, and with too much focus on safety and not enough on efficacy.
Cathie Wood's thesis is not about quarterly earnings or cyclical rotation. It is about exponential systems converging. Bitcoin as a global digital monetary framework, stablecoins as transitional monetary instruments, autonomous mobility scaling into trillion-dollar markets, AI compressing healthcare costs, orbital data centers redefining computation, humanoid robotics merging digital intelligence with physical labor.